get back, though, to that story that broke just moments ago. The FHFA directing Fannie Mae and Freddie Mac to delist their stocks from the New York Stock Exchange. John Erlichman standing by to explain what the wider impact is. John.
Betty, this has everything to do where these stocks trade. They're basically dollar stocks. Fannie Mae yesterday closed at 92 cents. Freddie Mac closed at $1.20. Now, in its release, the FHFA says this does not have to do with the performance of Fannie or Freddie. It doesn't have to do with the future direction. They go on to say it's that since the conservatorships were established, so that quasi-bankrupt status back in September 2008, these stocks have hovered around $1 a share. The NYSE has listing requirements around that $1 level, and when you're hanging around that level, they say, hey, what's going to happen? Are you going to do some reverse stock split to make these stocks well above $1? The reality here is the FHFA doesn't want to send the wrong message to the markets. They don't want to do a reverse stock split and make these $9 and $10 stocks and make investors think the story at Fannie and Freddie is different than it really is. Don't forget, Bloomberg has reported that the cost to fix Fannie and Freddie could eventually climb to $1 trillion. So instead they say, no, delist your shares from the NYSE. They'll still trade over the counter. So people who do tend to trade these things, not sure exactly who those people are, will have an opportunity to do so. Betty?
People with a really wide appetite for risk.
You said
That's
it right.
who they are.
Exactly.
Thanks, John.
All right.